All right, welcome back to another episode of The Aspiring VC. Your host, Matt Snow with Mass Ventures here. I have the privilege today of speaking to Carolina Rojas at NFP Ventures. But before we talk about anything venture, let's talk coffee. Dunkin' or Starbucks, what is your pick?
From all the years I spent in Boston, I have to say Dunkin' at this point, although Starbucks still has a special place in my heart, but I'll go with Dunkin'.
Yeah, that's a wise move. Good start to the interview here. So, let's just do like a 2-minute summary. Like, tell us about who are you, what's the firm you're in, and what's the role?
I'm Carolina Rojas. I am at NFP Ventures, and I'm currently an analyst on the team, with which NFP is an early stage venture fund focused on fintech, insurtech, and digital health.
And can we go a little bit more into like how NFP was set up and maybe why those focus areas and some of that?
Yeah, for sure. So NFP has a super interesting backstory. NFP, for context, if you're not familiar with the core business, is an insurance broker. We're the 5th largest in the US and Canada. And we pretty much do everything under the sun as it pertains to the brokerage business. But NFP focuses on 3 main stools, which are the property and casualty space, corporate benefits, and individual solutions, which is essentially a bucket for different wealth managers. We have 3 core wealth managers that roll up to the core business, retirement plan services, things of that nature. That's kind of the core business. And over the years, NFP has acquired a whole host of different companies through their M&A branch, and they've acquired about 45 to 50 companies per year. So really sizable. They're growing a ton. They started seeing a whole bunch of activity in the innovation space. And due to that, across the board, and especially in the management seat, they realized like it would behoove our business to get more into venture investing and more into the innovation landscape. From that, our fund kind of came to be, and we started the fund in 2018. The reason why we're focused on fintech, insurtech, and digital health is really aligned with those 3 lines of businesses within the core business. What's pretty interesting about our fund is that we are a standalone fund. So we are 100% returns driven, like any other, standalone venture arm, but we have the added benefit of being able to distribute within NFP and amongst our corporate clients internally. And that, kind of came to be because of the structure of our fund, where we have 50% of the capital that comes off the balance sheet of NFP, and the other 50% comes from internal LPs. So as you can imagine, incentives are definitely aligned internally. So a lot of our internal partners play a huge role in helping our portfolio companies with both internal distribution and also external distribution and partnerships with other partner firms and friends of NFP. So for us, that's kind of the backstory of the fund and why we're aligned in those 3 areas.
And how do you guys think about like the stage investing and like check sizes?
Yeah, so we focus on early stage, so series seed to B. Our sweet spot is in the series A stage. And our check sizes are 500K to 3 million, sweet spot 1 to 2 million. How we think about investing, we like to find a company that has a strong strategic fit within NFP. For distribution purposes. We can be flexible in which our investments don't have to be 100% strategic and can only align with a small book of business, or don't have to align as strictly. But for us, there's just an added benefit, especially if a company's early, for us to be able to be revenue accretive for them really early days and help them boost that revenue right at the start of their life cycle. So at the series seed or series A stage, that's where we have the most firepower. That said, companies that are more mature and in later stages, we can, definitely be helpful to them. But I think in kind of accelerating that growth in the early stage, that's where we've seen just a lot of activity and one of the core competencies of our fund and the distribution structure.
Yeah, makes total sense. And for your origin story, like how did this all come about? How did you get to this role? All the way maybe from like end of high school to like now.
Yeah, so definitely a winding path. But so for me, for context, my family, they are entrepreneurs. We have a whole host of different small businesses in the families, ranging from beauty salons to jewelry stores that I helped like my dad set up when I was younger. So I definitely grew up in more of that entrepreneurial environment, and having been born and raised in that environment, learning how to be scrappy, I didn't realize like how much that growth from a young age impacted me and just my perspective on the world. So it wasn't until I got to college and I started learning about venture. Like I didn't really know a ton about the VC world heading into college, and I thought I was going to be a lawyer heading into college, but then I kind of found this whole new world, and it mainly came from a panel that I had sat in on this panel, and it was all about the venture space. And, again, didn't really know much about it, but they spoke about having the opportunity to give capital to entrepreneurs and help them kind of grow their startup from A to B and kind of accelerate that growth. And for me, that was really akin to what I was used to doing when I was younger, from helping my dad start his own company to, working within my grandparents' company and kind of helping them with that. I saw a lot of parallels to that. So that kind of like clicked for me, like this is super cool and interesting space. And this is something that's actually really exciting for me. So that's how I kind of discovered venture. While I was in college, I tried a whole bunch of different, did a whole bunch of different internships. So I was at EY in their tech group for a summer. And I also took on an internship in an accelerator fund and was there for about 6 months, which I think for me, that was the first real taste of, the accelerator venture startup world. Because I got to work hand in hand with 2 startups and their CEOs and help them scale their business, and, did everything from helping them with product market fit to actually, building out an algorithm for one of the equity crowdsourcing companies that I was working with. So it was really interesting to just have a bird's eye view and have more of a view from the CEO's perspective of, how does venture financing kind of work and how does that lend itself into the startup space, and B, what do entrepreneurs kind of deal with on a day-to-day basis. So after that, I went into sales and trading post-college. And I knew my end goal was to get back into the venture and startup space. So while I was there, I took as many rotations and raised my hand for like different opportunities, within sales and trading as possible. So I, started off in the equity research sales seat. I spent some time on the convertible bonds desk and the derivatives, also spent some time in cap intro. So I started carving out, bird's eye view of like what the banking institution looks like and what are some of the needs of the different roles and also the different clients. And that honestly lent itself really nicely to my role now because I focus a ton on fintech. So having that context, it just, became a really naturally easy fit for me to, when I'm analyzing startups, I kind of understand the context within this fintech landscape. So that's basically been my path, like prior to venture, and, kind of happy to double click more into how I kind of toggled from sales and trading over to the venture seat as well.
Yeah, I mean, we'll definitely want to dive into purpose of the podcast, dive into how you broke in and like practical advice for others. But before that, I have to ask, there's not a lot of people in venture, and maybe I'm mistaken on this, but I don't think there's a lot of people in venture with the very strong finance and macroeconomics kind of understanding. So would kind of like to dive into that because I know that you spent a lot of time on macro and quantitative analysis and probably understanding, monetary policy and repo markets and kind of big credit market drivers. How does that impact your view of startups and the general landscape? Maybe even just with how much kind of money and liquidity is flooding the system with kind of all the central banks doing all this money printing right now.
Yeah, I mean, that's a great question. I think it's an important question. I think for me, how I think about the landscape, a lot of the times that like macroeconomic view is, super important for the venture space. And a lot of times people don't make that connection because they think of, economic money moves is way more impactful to the public markets. But for me, there is this like whole trickle down effect to the private markets as well that a lot of people don't put as much emphasis on. I think of this time that we're in right now, like a lot of people are, last dollars into the public markets. And that's why at this point, since it's been a bull market for so long, there's people that are, wanting to get into alternative opportunities, like take Bitcoin as one example, like having alternative assets and alternative ways in which they can, make a return on their portfolio, I think has been super top of mind. And with the venture space as well, there's been a huge push to, bring in other investors, not only institutional investors, and like allow them to have a seat in the table. So like there's been a whole host of different syndicates. Republic is working on that, like allowing smaller non-institutional investors to get into venture capital rounds of financing. And I think like it's a really interesting notion of the fact that we've had this bull market for so long, but there's also this worry of, when is there going to be a break as interest rates start to rise? Will that take away some of the liquidity from the private markets and, make people kind of switch their focus into more secure assets? So I think that's a big question mark. And I think for me, that's something I've been thinking through of like, when is that breaking point and when is it going to negatively impact the venture community and, just the startup landscape in general, as we've seen like valuations have been at an all-time high, particularly over the past couple months. We've seen some seed rounds at like $100 million valuation. So I think as I'm thinking about like the macroeconomic aspects, I think there is going to be some sort of breaking point and it's going to lend itself to dislocation across markets. So yeah, I think that's a really important question. It's super timely. But we'll see when the timing kind of happens for that.
Yeah, no one knows for sure. And I think we're biased because probably both of us like macro. And so we want to think it's more important than it is, but it does seem to feel like, you're almost being negligent to not be paying attention and having some kind of frame of reference and view on it, at least just consulting external experts. It seems to be getting to that point where, if you're a money manager of any type, including VC, you kind of have to understand these shifts that are going on in the background.
Yeah, no, I agree. And I think when people think of economics, they think of like doomsday sayers. But if you kind of look at the trends, like there definitely is going to be a breaking point. And so keeping that in mind, right, especially in the VC space, which is just very fast paced and competitive and getting into different rounds and very focused on like the micro, taking into account the macro, it like definitely behooves a lot of the fund managers and like larger funds that are raising in the near future.
Totally. And, you mentioned the Republic and what they're doing to kind of opening up the space to non-accredited investors. Obviously also SEC is kind of loosening that definition. Do you think that with what just happened with like the Reg CF and the Reg A plus limits going up a ton, I think Reg CF went up to 5 from 1 million and Reg A went up to like 75 from wherever it was at. Like, do you think the game is like permanently changed and we just haven't felt the impacts yet?
Yeah, I definitely think that's the case. I think now I've seen more of a trend of different companies, regardless of the round. It could be, Series Seed, Series, or, on the earlier stage side, Series A, Series Seed. They've been allowing more of those like smaller investors to come into their round. So doing more of a syndicate. And I think for me, it's almost become a play of, if we get more people invested, especially non-institutional investors, that could potentially lend itself to like more people writing about it on Twitter, more people talking about it, more people like personally invested in it. So I think it's almost become a way of like increasing your consumer base without really needing to do much except like carving out like a 5 million allocation on $100 million round for, smaller check sizes. So I think that's what I've seen, or how I've seen companies treat it as of late. I think overall, it's definitely going to cause companies to kind of change their habits. Because if I think about a really early stage company, what's not to say if they're right at that life cycle that they, need to garner a whole bunch of clients really quickly for them to go to, and do a syndicate with smaller investors and kind of raise that 5 million like pretty quickly. So in a long-term perspective, I think it's going to cause a lot of the valuations to rise like pretty rapidly and aggressively, and going to cause a lot more competition in that Series A stage to say like, all right, investors, what are you actually bringing to the table? Otherwise, like, why wouldn't I just do this syndicate, right? With smaller investors that, might net be more beneficial to me if I'm like at that certain late stage of my life cycle where I need those additional customers and additional eyeballs on our company. So I think it's going to be a problem, right, in the next year or so for VCs to really show like what our value add is if you're kind of competing with that sort of structure.
Yeah, the famous line, how can I help? And like everyone has on their deck, right, our value add, but it's I guess going to be put to the test a lot more now. I don't want to forget to make sure we go into this. So like venture is such a hard space to get a job, and I think it's like the same amount of job openings as like professional athletes. Like, what are these kind of networking hacks and other tactics you use that kind of help you get to this position?
Yeah, I think so. For me, backstory: in order to get into this industry, you're going to deal with a lot of no's naturally. There's a lot of people that are vying for these seats, and there's limited spots. And a lot of times in venture funds, it's just such a small team too. So, case in point with my team, we're a 4-person team. And so, just extrapolating from that, like there needs to be a personality fit. If you're only working with a team of 4, you want to work with someone that you get along with, that you can learn from, that you can grow from. So I think, there's that barrier to entry. It's just like having that like personality fit. And, simultaneously, it's also like the element of trust. Like, can we trust this person? For me, a lot of times, since my team is split between Chicago and New York, most of the time, even in non-COVID world, we were interfacing, via Zoom or a conference line. And so we didn't have a ton of in-person interaction, but, we kind of all held each other accountable. And there was just a lot of trust placed on the team members, even if we weren't in the same room, that we were, kind of getting the job done. So I think like those 2 elements just makes it really tricky when you're trying to break in to kind of prove that A, you can be trustworthy, and B, that you're a good fit for a small team. And so kind of extrapolating that with like my process, like failed a lot, talked to a lot of different firms, and like along the way got a lot of no's. Little by little kind of made it closer to the finish line, and started refining my pitch, started refining, you know, the startup company that I would like present and support and kind of defend. So I think from that, like one of the biggest tips I have for anyone trying to enter the venture space is just not being afraid to fail. Even when you're in the venture seat, a lot of times it's like very binary. You either win a deal or you lose a deal. You either say yes to a company, you either say no to a company. So I think like building up that tough skin, even for when you're trying to break in, it's really helpful for when you're actually like in the seat and dealing with some of the nuances of being an investor in the startup space. And I'd say my other advice is to network as much as possible and meet as many people as possible in this space, and kind of pick up on the nuances of the different funds. Like I remember when I was interviewing, there were certain funds where, you know, before I would even interview for them, I would kind of like meet with the associate and kind of trying to pick their brain on the seat and what it is that they do. And there are some funds that they were like, all we do is like blog all day long. Like we're huge on thought leadership. We're huge on like having a social media presence. So extrapolating from that, if that's like your goal, if you want to enter into a fund that's like that, then like I'd encourage you to like, you know, be more active on social media, start blogging, start writing different posts. Cause like for them, that's definitely going to catch their eye if you've been doing it already, before you even apply. But on the flip side, there's some funds that are just like really heads down focused on like building themes and building strong theses on areas. So like, if that's the case and that's something you're focused on, you know, make sure that you're diving into different areas and you have an opinion and you have a perspective on a specific theme or a specific vertical. So yeah, that was long-winded, but those are just some of the broad strokes, like tidbits that, you know, I gathered along the way that, you know, I like, if I would have known then when I was applying, I might have, you know, done some of those elements differently. And I think it's definitely helpful to think through, especially on like what type of fund it is that you're applying as you're going through the interview process.
Yeah, I mean, you're basically going to go through the gauntlet applying, and then you're still going to do that once you're in the seat. And so I think people need to know that that is what it's going to take. And if it isn't worth it for you, then that's okay. That's not a bad thing to find out, but better to realize that, rather than trying to kind of go halfway in, because you have to basically go all the way in just simply because of how competitive it is.
Yep.
So I think I have a good sense for this, but I guess I have a good sense for what brought you into the space, but what long-term like keeps you interested in kind of the venture and startup world?
Yeah, I think for me, throughout my career and my time at NFP, especially since I joined the fund pretty early. So the fund started in 2018 and I joined in 2019. I've really gone to see like different life cycles of venture, and also just like have gone to wear different hats. So when I started off, you know, I was kind of heads down helping us build different processes. So, you know, kind of streamlining our fund model, building our fund model. I built our fund model from scratch the first month I was on the job. So really got to learn about like venture financing then. Then, you know, kind of like diving into different deals and writing the investment memos and, you know, being a part of the due diligence process. You know, following that, also spending a good amount of time sourcing and hunting down new deals. And then, you know, lastly, after a year of being on the fund, you know, bringing an investment to the table and kind of leading that to close. All of that is all clearly like definitely very different hats, very different perspectives. But I think now what I'm most excited about is, you know, now since I've brought a deal to the table, I kind of feel like that's my baby. And now I'm seeing like a whole different side of being a part of investor meetings and really getting to add value to some of the startups and following them after dollars are in, which for me, that's like the most exciting part. And I think that's, one of the elements that as I think through the next couple of years and like what's really keeping me in ventures, it's definitely that, just like having the opportunity to work hand in hand with different founders and kind of helping them scale the business. Me personally, that's like super exciting to just, seeing the growth month over month and kind of adding to that and being able to give a perspective that actually impacts the business. That's what's super exciting. But I think generally too, I personally think like ventures, like the coolest job in the world. And it's just like amazing to be able to talk to interesting people that have like phenomenal new ideas, and B, also have time to like think about what does the next 5 years of the world look like? What does the future of insurance look like? What does the future of finance look like? I personally am like a lifelong learner. So being able to kind of use some of the information that I've seen and read on and kind of apply that to like a forward-looking lens is super fascinating. And that's one of the things that really excites me about like venture in the startup world in general, because it's so forward thinking that, for me, it's just like the most amazing space, and the most amazing career path.
That's an awesome answer. And I know it's like a huge deal to like get an investment through the pipeline. Do you want to talk about that experience and the company and kind of everything around that?
Yeah. So our, the round isn't public yet, so I'm not sure if I can name the actual company, but I'd say the experience. So on the experience front, I didn't realize how long it took to take a company like from a first meeting to, B, due diligence, and lastly to finally making the investment. So for me, the company that I was kind of introduced to them via one of my colleagues in the venture space, which kind of, it's a whole nother discussion, but, having friends and having your tribe in venture, like in any other industry, it's like one of the most important things, like having people that you trust for their opinion and to say like, hey, is this an interesting company? Am I crazy? Am I missing something? I think that's like super undervalued in the venture space. And a lot of people act like, yes, I'm doing this siloed and I'm thinking through, these interesting companies like on my own. Like, I think it's definitely a team effort in the sense of like bringing together your own resources and network. But beyond that, I'd say, with first meeting a company, it makes you realize, especially in a virtual world, it takes a really long time to like actually build trust with people and to like, actually do what you say. So like naturally in every first meeting, there's like the pitch of like, this is NFP, this is what it is that we do. But actually following through with some of the elements of, connecting them to the core business, trying to figure out a strategic fit or a good angle internally, and actually like tying those connection points with our contacts. I think that's like a whole other ballgame. And, for me, it definitely was an eye-opening experience in that, it kind of took 6 months from the time that I first started having the conversations to the time in which we had like fully figured out a distribution path and also gotten our counterparties on board, and then actually coming into the round. So I think the experience was, really eye-opening, but also really exciting. And I think for me, it was also like one of those personal goals, because I read an article on Medium that said, as a venture investor and definitely as an analyst, you should source and lead a deal within your first year. And for me, that was like extremely daunting. But, it's like one of those things that, if you have a goal set, especially when it comes to something like like sourcing a deal, it takes so much time and so much, kind of like cultivating a relationship that I think for me, that was like one of the most exciting and also eye-opening elements of sourcing and leading a deal.
Totally. I mean, I was talking to another associate about this the other day, and he compared it to pushing a boulder up a hill, which is kind of because it's like a slow, grueling process, and you get excited when you're 10% of the way up. You're like, "Oh, I got this thing moving!" But left to it. But congrats! It's a huge win for you, and so that's obviously awesome.
Thank you.
If you're ready, we can do some of these rapid fire questions.
Yep, I am ready.
So first one, who's been one of your most important mentors? And do you remember something they said or did that still kind of stands in mind today?
Yeah, so my, I have a lot of mentors and I don't want to single any one person out. But I think Alex Guerrero, he told me something that just really stuck with me during my career in venture. And it goes back to that whole find your tribe notion. He told me when I was a couple months into venture, he said that's like the most important thing because, people want to do business with people that they're friends with. And so finding your tribe within this community, within their investor community, which is also applicable again to all different industries. But he said that's like one of the most important things that you should do your first 6 months of the job. So yeah, I'd say that quote and Alex in general, he's great.
That's awesome. Outside of NFP, whether it's like another firm or a specific GP at one of these funds, like who is one of your favorite VCs?
So I just read The Hard Thing About Hard Things. So Ben Horowitz, I'd have to say is one of my favorites. I'd say just like getting to peek into, how he scaled the business and all the difficulties that come into that and how that made him a better investor. It's just like fascinating. And yeah.
That's awesome. That'll segue into the last question. Well, before we get to that one, what are the characteristics of startups that get you excited about potentially investing?
So I think a big characteristic I have is the origin story and like why they got into the space. So for me, that's one of the things I like to poke and prod in during the first meeting. Just like, why this, why now, like what kind of compelled you to this? Because I think a lot of times, especially in the earlier stage, it's like way more interesting than like where the product's at that given point in time. It's just like, what motivates them, what drives them. And I think in general, founders that are just really excited and, thoroughly in the world that they're innovating in and, and really excited about the space again, that kind of lends itself to some of the most interesting companies and just thought partners for a fund.
Totally. Like, I guess the non-monetary motivation and the origin story of the founder, founder.
Yeah, exactly.
So like I was alluding to earlier, I do like to ask what people's favorite like books, blogs, and podcasts are. So obviously we got one of those from you, but what are some of your other favorite sources for that stuff?
Yeah, so I mean the 20-minute VC, love their podcast. In terms of other blogs, I mean, I guess I'm like very run of the mill. I like the Wall Street Journal and get my daily news there, and like just poking and prodding within Medium posts. But I'd say I guess more specifically for people trying to break into venture, like strictly VC, I love following their posts. Like they do a very great and succinct job at just listing out funding and also listing out new funds that are coming about. So that's a huge one. But other than that, pretty standard TechCrunch, Wall Street Journal, that sort of thing. But yeah, I do like 20-minute VCs and listening to different podcasts.
With your like macro and finance background, I actually think you should check out. Have you heard of Real Vision?
What? Check out which one?
It's called Real Vision. They built like a Netflix for finance like geeks, and it's literally like they'll do a daily stock market recap with a different investor expert, and they have all these kind of deep dive videos. I don't know, it just strikes me as something you would. I'm not even on the payroll for them. Maybe I should be, but it strikes me as something you would you'd probably enjoy.
Perfect. Yeah, I'm gonna look into that.
Awesome. So, all right, here's a question that I stole from Tim Ferriss, admittedly, but it is a great one. What is a purchase of like $100 or a few hundred that has like an outsized impact of utility or happiness in your life? And I've had people talk about exercise equipment, AirPods, a really high quality backpack. Like it could literally be anything.
It's a tough one. Oh God, I'm trying to think.
I can explain what my answer is just so you have like context on it.
Yeah, go for it.
So I'm like a guitar player, and I like to play with what's called tube amplifier, but they're really like heavyweight and like built awkwardly and hard to move around. And there's this brand of amps called Orange, and they invented like a lunchbox one that actually is a tube like sound, so it has the super high sound quality, but it's like half a pound. So I could literally carry this in a backpack, and it's one of those purchases where it's like been I was on the fence about it, and it's been like one of the best like purchases I've ever made.
Got it. So for me, there was I'm trying to look up what the exact name of it was. So it's like this beer keg, but it's like a small version of a beer keg. I can't look up the name.
Like a pony keg, isn't that what it's called? Or
what was that?
is it called like a pony keg? I thought that was what they're called.
No, it is. Oh, I can't believe
Not a
I can't.
kegerator, is it?
No, it's not. It is. Gosh, why can't I find this? It's like a small keg. I can't. I'm not sure why I can't do this now. But I bought this for my boyfriend because I'm big on. I much rather give a gift than receive one for some reason. I guess I just like express my love via gifts. But it's basically this like small keg, and you can take it around to your local like brewery and fill it up for a fraction of the price, and then it keeps the beer drinkable for at least 2 weeks time. And so just seeing the smile on his face and his dad's face when we took it to a brewery and filled it up, I think that was worth $1 million on its own. Yeah. So that, I guess, is one of my favorite purchases.
No, that's awesome. I didn't realize that was a thing, that you could just like load up like the gas station, just like fill up your keg at the brewery and then walk away.
Yeah, and it's way cheaper, right, than just like buying a beer at the brewery. I think it's like $30 to fill it, and it holds up to 10 beers, but it's also, $30 depending on the beer. Like if you're getting a more like, if you're getting an IPA that has a higher alcohol content, then it's probably more. But yeah, it's like pretty good if you are really into beer. So
it sounds like some serious utility there. So, last one here, I definitely want you to promote yourself, whether it's Twitter, LinkedIn, or blogs or anything else. Like, what is the best place for people to find you?
Yeah, so I do have a Medium blog, so you can find me there. And I also have a Twitter. So I think those are like the easiest ways to find me. So my Twitter, Carolina with 2 A's, Rojas with 2 S's. And then my Medium, just like Carolina Rojas, you can find me there. But yeah, those are 2 of the best places to find me. So feel free to follow.
Yeah, no surprise. Big VC spaces on both of those. So I really appreciate the time. This has been a super fun episode. I look forward to staying in touch as well.
Awesome. Likewise, Matt. Thank you.
Thanks.
Looking to innovate, invent, and disrupt? We're your partner to fuel your growth. Contact us to learn more.